Good afternoon. This is Anka Metcalf with TradeOutLoud.com. Today is Sunday, September 22nd, 2013, and it is 6:45 p.m. Eastern Time. Before we dive into our technical analysis and our favorite trade of the week, let's talk a bit about what has been going on in the market for the last week. So, as you all know, Federal Chairman Ben Bernanke shocked the market on Wednesday, September 18th at the FOMC meeting by delaying the tapering process. And right now it seems less likely that the tapering process is going to start in October or even at the end of the year. And remember, the end of the year coincides with Bernanke's end of mandate. Now, this unexpected announcement made the euro dollar appreciate, to this current level that it is trading at, that 3,550 approximate area, this high right here. So this came in, federal announcement right now, so no tapering process, rocket bar, and consolidating bullishly above 1.3500. All right, so this is very, very bullish right here. We have a very bullish consolidation happening at about 50 pip, in about the 50 pip range, with heavy support under 1.3500 and resistance at 3,550. So I'm just going to mark this area, just to make it very, very clear. Now, any breach of this area right here of 3,550 can literally project the euro dollar currency pair much higher. Now, this will be an active trade if the current support level holds at 1.3490. So we're looking for this area to hold. Remember, if this area will be breached, and we will be more likely to continue lower, find another support level, and then that would be a game plan, a game change for this currency pair. But right now, basing very bullishly right here, and as you can see, it has found this support level ever since the Fed announcement. So it popped higher, retraced, popped a little higher again, came back to test the previous area, just slightly higher than the previous low, traded a little higher right here, never challenged the previous high, and right now back down to the previous support area, popped a little bit, traded, as you can see right here at the Australian Open, right here, traded a little higher into this area, and right now retracing. So we're still in bullish territory. All right, so let's take a look right now onto the weekly chart, as the weekly chart is going to give us some price projections for this currency pair, future prices that can be met. All right, so if this trade, based on a 1 hour time frame with an approximate stop loss level of about 50 to 60 pips. So remember, the entry 1.3550 and the stop should be anywhere below 1.3490. So this would be a 60 pip risk. We're looking at a first target of 1.3600. And I'll show you this area. It's right here, 1.3600. So this is going to be the first target for the currency pair, hitting another whole number. Our next target is going to be 3,650, which is going to be a fulcrum area. And then our last target for this currency pair for this week is going to be 1.3700, which is a very significant level that is actually a weekly resistance level right here. Okay, so this is the weekly resistance level at 1.3700. Now, it would be very, very interesting to see how price will react in this area if we reach this area, because this will mean a lot for this currency pair. This will actually change the trend onto the daily chart. So when 1.3700 is breached right here and reached into this area, any consolidation can propel it higher into the 1.400 level. So this is the approximate level right here. This is our next projection for the euro dollar. If we're going to maintain the bullish bullish price action in this currency pair till the end of the year, if the Feds are not going to start the tapering process, these are the targets that we will look onto for this currency pair for the euro dollar. Okay, so remember, our first target for this week's trade is basically the high that was set this year. So it would actually mean taking out this year's high that was set on January 27, 2013. So this year. So just to recap our trade, our favorite trade of the week is the euro dollar. The time frame that we are looking at is the 1 hour chart. We're looking at this highlighted area right here. We're looking for an entry above 3550, and we're looking for a stop below 1.3490. Our risk is an approximate 60 pips. Our first target is set at 1.3600, so that is for a gain of approximate 50 pips. Our target 2 is at 1.3650 for a gain of approximate 100 pips, and our target 3 at 1.3700, whole number again, for a gain of 150 pips. This is our favorite trade of the week. Thank you so much for joining us. Don't forget to subscribe to our YouTube channel to receive more timely trade ideas from us and updates as well. And don't forget to like our fan page on Facebook. It's facebook.com/tradeoutloud. And remember to visit our website, tradeoutloud.com, for more information on our education and other services. Thanks so much for joining us. See you next time.